Most people don't even realize you can negotiate your interest rates, and it's actually much easier than you think. I'm Mia Inez, and I've spent 15 years helping people take control of their finances, and high interest credit card rates are on the top of that list. The thing is that high credit card interest rates can really trap you into debt for years, which is exactly what credit card companies are banking on. But the good news is you don't have to just accept them. In this video, I'm going to walk you through step by step on how to negotiate those rates and keep more of your money in your pocket. Before you start making any calls, you need to know what your current interest rates are. Pull out your latest credit card statements or log in online and find out what your APRs currently are. They usually range anywhere from 15 to 30%. And I've actually personally seen higher. I would then list all your debts with your interest rates next to them and prioritize the highest interest rates first down to the smallest. Your highest interest rate is the first one you should be trying to call and negotiate, and then go down the list. Some people wonder why interest rates matter. And if you pay your balance every month, interest rates don't matter for you. But if you're carrying a balance, meaning that when you get your credit card statement, if you don't pay that full amount, not the minimum, the full amount, you will be paying interest that following month. Let's say you have a balance of $5,000 and your interest rate is 25%. That means you will be getting charged for that year $1,250. And that is assuming that you don't add another charge to that account. So imagine for a balance that's $5,000, you're going to end up paying $6,250. But if you're adding purchases to that and you're not paying the balance again, month after month after month, that $1,250 will shoot up real fast. And so when you ask yourself, what is my APR? What is my interest rate? It's essentially what the fee is for using their money and not your own. The next thing you want to do before making any calls is finding out what your credit score is. Your credit score is going to be a really good bargaining tool, especially if your credit score has improved since you first got the credit card that you're inquiring about. Don't confuse getting your credit score with getting a credit report. You don't need a credit report. You just need your credit score. And you can get that through free services like Credit Karma, Experian. A lot of times your banks offer it. I know when I sign on to my bank accounts online, every single bank account that I have shows me my credit score, or at least has a tab where I can click to see what my current credit score is. If your credit score is a 750 or higher, you are in an excellent position to negotiate your interest rate. If you have a good credit score, which is usually between 700 and 749, then you're still in a solid position and have a strong case to negotiate your interest rate. And if your interest rate is fair, which is between 650 and 699, you should still call and try to negotiate. You might not get a huge reduction in your interest rates, but any little bit helps. Now, why do credit scores matter in this process? Listen, lenders reward responsible borrowers. So what that means is if you've made consistent one-time payments and your credit score reflects that, you're at a lower risk, meaning that they're probably going to be willing to offer you a lower rate. Something worth mentioning real quick is a lot of people believe that having debt automatically means you're going to have a low credit score. Having debt does not mean that your credit score will decrease. In fact, a lot of times it increases. If you have a debt and you're making your minimum monthly payment every month, you're a bank's dream, a credit card company's dream, any lender, quite frankly. Remember, pay your minimum monthly payment means that they're making the most interest that they can make off of you, okay? And when you're paying consistently, you're not missing payments, you're their perfect customer. This doesn't decrease your credit score. Late payments and skip payments, that's when you get yourself in trouble, and that's when your credit score decreases. But not for having debt and not for paying the minimum monthly payment. So many people don't understand this. And I get it, because what usually happens is when you pay your minimum monthly payment, the interest rate continues to rack up and you never actually get to pay down your debt. So something that was $5,000, 3 months later is now $5,500. And that's not including if you've added charges to that account, right? And so that's when it gets out of hand. That's when you get yourself into trouble. Now, the last thing you want to do before you make any phone calls is research. Find out what other credit card companies are offering. What you're going to be looking out for is credit cards that offer similar features but have lower interest rates. You're also going to be looking for credit cards with promotional offers that have 0 APR balance transfers or introductory rates. Now that you've done all your research, you're ready to really negotiate. You want to point out why you've been a loyal customer, why they should try to keep you, and subtly let it be known that if they're not willing to negotiate, there's no reason why you wouldn't go somewhere else. So I would say something like, hi, I've been a loyal customer for X years. I always make my payments on time. My current interest rate is X, and I've seen lower interest rates available elsewhere. I'm really interested in seeing that you can lower my rate to something much more competitive. Key things to remember is it's not their job to be helpful towards you or lower your interest rate. In fact, if they could raise it, they probably would. Okay. So just stay polite, right? Because at the end of the day, they don't have to help you out in this situation. They could just let you go with another company. But also be confident. You know you've been a loyal customer. You know you have the potential to go elsewhere. And you're not asking for anything unreasonable. The most important thing is do not accept the first no. They're not going to jump out of their seat and be like, yes, let's negotiate. Just ask for a supervisor if they do say no. Or you can take the route of asking, are there any promotions or programs currently running that could lower your interest rate? Some of the common objections you'll get is, we can't lower your interest rate right now. And while that's never true, you're just going to respond with, I understand, but there are lower interest rates elsewhere, and I'm really interested in staying with this company. Are there promotional rates or any other options you can provide? Another common one is, your rate is already low. And my response would be, I appreciate you think that, but I've seen competitors offering even lower rates, and I would really like to stay loyal to this company if I could. And if they won't budge on lowering the interest rate, I do have like one last Hail Mary. I'll usually say something like, if you can't lower my rate permanently, what about a temporary rate reduction that I can take advantage of? Now, will this always work? Will every company be like, yes, no, don't leave, let's lower your interest rate? No, absolutely not. And they don't have to. But what I would encourage you to do is, you did all this research. You actually found competitors that have lower interest rates. So apply for them. Apply for a new credit card, get the lower interest rate, take advantage of balance transfers, and move on to a new company. There's no reason to stay at a company that won't work with you, or that you know you can get a better rate elsewhere. Your time there has passed. Like, it's time to move on. And that's okay. That's just how these things work. Now, if you want to take your debt payoff strategy even further, check out my video on the 0 APR transfer balance tax. When I tell you this is my golden nugget, if I could use this for every client, I would. Check that video out. Like, you will not pay off your debt any faster with any other strategy. I'll see you there.